group level. Revenues were 6.8 million, which was a small decline compared to the year before, but it was a 30% increase quarter over quarter, so the company is making a good progress. Why we were still down 4% over last year is because we had coastal harvest last year, which we didn't have for 6 months this year, and only just started kicking in Q3. Then the Q-on-Q strong performance is really explained by the improvements of coastal harvest, which started again in Q3, and also at the same time there were no flower sales in Q3, so that was a damper on revenues, but more than offset by coastal harvest and by MDP. Volumes increased by 8% to 1 million grams, and the average achieved price was $6.45, which is a 12% decline year on year. When you look at it on a quarterly basis, Q over Q, then our volumes were flat and the achieved price increased with 33%. The explanation for that is that in previous quarters we had flower sales, which we didn't have in Q3. Flower sales at a much lower price than extracts, edibles, and that's the explanation why Q on Q the price decreased. If you adjust for that, then the price did not increase. The gross margin at the group level was 67%, but that includes gain on biological assets of 2.4 million. And if you exclude that, then the gross margin was 31.5%. There was also an impairment for coastal harvest inventory included in cost of goods sold. And if you exclude that, then the gross margin was 35.7%. Turning to the 2.4 million of biological assets, the company harvested in Q3 7,056 plants with a yield of 25,225 pounds of flour, trim, and fresh frozen. And to give you an idea of the revenues that we expect from that, there is a metric called the fair value less cost to sell. For the premium, that it's $1.35 grams, above 38 cents, trim 10 cents, and fresh frozen 6 cents. And the total value of that is 4 million, which should be expected to come in as cash flow as we start to sell the flour, trim, and the fresh frozen. Going to the operations. First, A&M. Revenues increased with 42% to 3.9 million. And Q on Q they were flat, which was actually a good result because we didn't have any flower sales in Q3. The price achieved was $5.93, which was a decline of 24%. But Q on Q, a 39% increase explained by the lack of flower sales in Q3, which happens in A&M, and they sell at a much lower price than the average mixed prices. Volumes increased with 57% to 671,000 grams. The gross margin at A&M was 44%, which excludes the gain on biological assets. And to give you some background of the developments within A&M in its products, we sold 150,000 grams of shatter. That was a decline of 29% year on year. 130,000 grams of cartridge oil. That was a year on year decline of 5%, Q on Q plus 9%. 65,000 grams of live resin. 146,000 grams of edibles. Live resin and edibles weren't there last year. And then we also sold 179,000 grams of pre-rolls, which wasn't there last year. And Q on Q, there was a 47% increase. HLO, can be very quick on that. HLO is in runoff, as we have said a few times now. It had hardly any revenues, and it's, as I said, it's in runoff. Coastal harvest. Revenues declined 79% year on year, but that is because we had a stellar year with coastal harvest last year. And then towards the end of last year, the business was mothballed, and it was only just recently turned on. In fact, we sold $770,000, which basically is the same improvement because we didn't have it in Q2. So that was also the Q-on-Q improvement. Coastal Harvest processed 206,000 grams of distillate at an average price of $3.49, and the gross margin improved to 21% from having been negative. Coastal Harvest showed a good performance. And Mendo Transportation Distribution revenues increased to 2.2 million. There was no comparison for last year because it was acquired in Q1 2020. The company sold 180,000 grams at an average price of $11.12. Q-on-Q revenues increased with 91%. The increase of the AGEEF price was 10%, and volumes increased with 51% Q-over-Q. To break it down into products, was 160,000 grams of distillate and 20,000 grams of live resin, and the gross margin at Mendo was 25%. Turning to operating expenses. Total operating expenses were 3.7 million, which was a 53% decline year on year and a 26% decline Q-on-Q. Looking at the components of it, G&A declined to 45%. As the word declines, G&A at HLO, Coastal Harvest, and corporate. And there were 4 staff contributions from UBI and Propeller, which were not there before, and their costs were together $189,000, including the G&A. Salaries declined to 4%. Corporate salaries increased somewhat, and there were the first half contributions from the ones I mentioned before, Propeller and UBI, and all others, all area salaries actually declined. Professional fees was really the main impact. OPEX came down. Professional fees declined to 73%, predominantly corporate, as M&A is declining. And there were first time contributions from UBI and Buffalo, which in total have professional fees of 195,000. And then sales and marketing increased to 17%, and that's reflecting higher commissions at Coastal Harvest and Mendo as the business there increased. Then adjusted for non-cash items, operating expenses were 3.5 million compared to reported 3.7 million. The adjustments include 152,000 for non-cash salaries, and there was a reversal of a non-cash consultants payment of 880,000 and share-based compensation of 895,000, all in all resulting in a $200,000 decline on an adjusted basis for operating expenses. Adjusted meaning what is non-cash. Turning to income from operations. In our financials, we have income from operations before undernoted items, which is the same as EBITDA. Our EBITDA was 0.9 million in Q3, which really follows from an improvement in gross margins that I discussed, and also because of the dramatic or significant decline in overheads. And adjusted EBITDA was 500,000. The adjustments are included in depreciation as cost. Depreciation included in cost of goods sold was $277,000. Was an impairment I mentioned before of 284,000. Share-based compensation 333,000, and share-based compensation for services was 1.1 million, and the gain in biological assets was 2.4 million. If you adjust for those items, you get the adjusted EBITDA of 500,000. And it's also to mention that it's actually the first time that the company in its history turned EBITDA positive. Cash flow, that's also a first. We actually generated cash from operations, which typically is cash used, but now we have cash generated from operations, which was $152,000. The components of the cash flow, the loss was $3.2 million. Non-cash adjustments to add back were $2.8 million. And then there was a release of working capital of $503,000. And the non-cash adjustments of 2.8 includes an impairment for Cathedral City acquisitions of 2.5 million. Then to get to the total cash, the company raised 1.2 million from equity in debt. Payments for leasehold and share issuance costs were $500,000. And as a result, the total cash inflow for the quarter was 0.8 million, which also was a first. Turning to acquisitions. In Q3, Buffalo LKJ, which is the North Hollywood dispensary, and its management company, UVI, OTC, which is Epic Electric Chocolates and Canapils, were closed, and we also took a 25% share in the flower shop. At the fair market value, basically at the prices that we paid for those acquisitions, the total of that was $22 million, and 191 million shares were issued for the acquisitions. And to give you some detail there, Buffalo we paid $4.2 million, and 43.7 million shares were issued. LKJ we purchased it for $4.5 million, and 43.9 million shares were issued. UVI 7.6 million and 9 million shares were issued. And then OTC, we paid 151,000 and 2 million shares were issued. And then Canapils, we paid 5.6 million and 93 million shares were issued. Turning briefly to Buffalo. Buffalo harvested 1,095 pounds with a yield of 302 pounds. The average fair value less cost to sell is $2.67 per gram. And the Buffalo harvest that's imported is not included because it is in the process of getting its GACP certification. That would actually add 365,000 to the cash flow once it becomes available and saleable. But that hasn't happened yet, but that's imminent. Now turning to the balance sheet. At the end of September, cash, including restricted cash, was 3.8 million. Debt was 9.5 million. We had a debt to equity ratio of 20%. That compares with 23% in Q2 2020. And then we have working capital of $13.1 million. Lastly, the capital structure. Total shares issued during Q3 was 289 million shares. 253 million shares, including closing costs, were issued in relation to acquisitions. 7 million shares were issued as finder's fees, and 30 million shares were issued for services. And there were some other issues, but these were the ones that kind of were the larger amounts. And then lastly, the share count at the end of, at November 13 was 950 million shares outstanding. That concludes my presentation. I think as a takeaway, we turned EBITDA positive for the first time. We generated cash flow from operations for the first time. We generated cash at the end in the cash flow for the first time. So the company is in pretty good shape. That concludes my presentation. Thank you.
Great. With that being said, thank you, Philip. Kieran, before we get to some of the questions, are there any comments that you have on Philip's presentation?
Well, I tweeted something about rare air, and Saturday I actually had lunch with a friend of mine who is the principal at Arcadis and Extraction Services, David Kivitz. And I said, David, I mean, companies in the cannabis space have generated true operating cash flow, meaning when all is said and done, who's actually throwing off positive cash? And he said to me, look, as far as I know, there are 3 other companies that do it or have done it. One is Ayr, AYR, much bigger than us. The second one is True Relieve, which is the biggest, arguably, that or Cura. But Cura has never generated, I believe, positive operating cash flow. And then the third one, he said, is GTI. And I know of another one, a small company, and a company I admire a lot, called Vibe California, run by Mark Waldron, which I believe has also done it. So I think you can count on your hands the companies that have done it. And we, excuse my French, but damn well plan to continue this trend. And we see no reason why we can't continue the positive trend we're on. So, kudos to our team and our 200 plus employees for doing it. And even though we're smaller and our market cap's smaller, I think we got a lot of room to grow. And we comparatively are not valued based on, how do I say it? When you look at our comparable value relative to the big boys, we're the Rodney Dangerfield. We just don't get the respect. But that being said, we're going to do everything in our power, and we see no reason why this positive trend will not continue on a forward-looking basis.
Okay. Well, we have a couple questions that were submitted, and then we'll be able to take, if there's time remaining, we'll be able to take a couple questions from the audience. The first question here is about the fellow. So the question is, how is the situation in Lesotho, and is the company on track to scale up production in 2021? When will the planning season start, and is your takeoff partner ready to receive cannabis from the fellow?
Okay, so those are a lot of questions and good questions. First of all, I want to say that our 2 biggest sort of strategic focuses in 2021, we have 3 strategic focuses in 2021 and towards the end of 2020. The first strategic focus is Oregon. And in Oregon, I think over the next couple of weeks, it'll become very clear that we plan and intend to be number 1 in the state. And what I mean by number 1 is we are planning both with organic growth and some strategic moves to be the number 1 seller of cannabis products to dispensaries in Oregon, according to both third-party data and our own analytics. That's one of our objectives. Our second objective is to rapidly grow the fellow over the next 12 months. And the third objective is to basically get California growing geometrically, if not exponentially, by getting our cultivation strategy in California in order. So let me first address Buffalo, which was the first question. What is our situation there? Our situation there is right now we have a window to seize the day. So we're sending Justin Gardner, Gordy, who's our top grower, who heads up Evans Creek, in the next 48 hours there. He just cleared his test, and he's going within 48 hours. As we've mentioned before, Andreas is being reassigned to head up all our international operations. He will be going by the end of the month. The first goal there, and the goal in any MSO or any multinational operator like ourselves, is plants in the ground. So December is when we have to get the plants in the ground, and their job is to get as many plants as humanly possible in the ground. And this is a figurative thing. Obviously, they're going to be in cocoa, they're going to be in pots, they're going to be in, hoop house, greenhouse settings. But the whole goal is to get the plants in the ground. The second objective at Buffalo is to get GACP nailed, okay? And what I mean by that is we already have GACP clearance on all our SOPs and audits done. What we're doing right now is laying the last of the infrastructure to do that. And to be very granular and specific, additional fencing, more cameras, more toilets, more drying space. And all of that, we're hitting hammer to nail. We're sending the money down there, and we're going to get that done by the end of the year. That's the mandate to Andreas. The third thing is with Malta and MedCan. So the principals of MedCan have sent us the space they're leasing. One thing that is really great about Malta right now is, given COVID, there is a lot of CMGP pharmaceutical space up for grabs. So MedCan has finalized the space. They've gone to the Medical Authority of Malta to get permission on that space, but that space is ready to wear or ready to use because it's already CGMP space. And it's literally putting in the tables, putting in some of the weighing machines, putting in a jarring system or a packaging system that's CGMP, and that's operational. So that is, I would say, conservatively 60 to 90 days away. Once we get product into Malta, we intend to bring product into the cannabis medicinal products into CanMart as well, vis-a-vis Malta. But they have to be, when we go GACP up from Lesotho into Malta, Malta has to make cannabis products into GMP to bring them into the UK. And I think that answers that question pretty extensively.
Okay, the next question is regarding California, and it's about the huge farm in California that people are wondering about for outdoor growing. Basically, is the plan that will establish an indoor grow as well, or is this primarily just for outdoor growing?
Okay, so we have a three-pronged strategy in California. So let's start with outdoor. So outdoor, and I would challenge anyone to, on this one, is in terms of a Northern California Emerald Triangle outdoor grower, there is no one better to partner with than Green Matter. And when you look at Jed and Joe, who are the majority owners of Green Matter, they're also very large owners of Connected. And these guys have been growing for 30 years in the Triangle. They have one of the largest processing facilities I've ever seen for cannabis in Sacramento, and they already have 20 acres licensed in Lake County. So even though we're great growers, I've never seen anyone operate at their scale outdoors. Now, obviously, there's Pro Farms, and there are other guys down in Southern California operating at this sort of scale. But in the north, in Lake County in particular, but anywhere I would say south of Portland and north of San Francisco, I don't know of anyone operating at this scale. There may be, but I don't know of anyone. So I think we have a great partner there for outdoor, and the plan is to get the first seeds in the ground, which will be their autoflowers in March, come out of those in June, and then go with their tissue cultured teens, which is a boutique grow, into the ground in June, late June, and then out of the ground in October and November. Katie and I were just there, and we're literally building roads, building barns, ordering massive amounts of equipment, and we have a plan that's detailed week by week. We're looking at a large series of, right now, greenhouse grows. Greenhouses being forced air greenhouses, Conleys, Cravos, what have you. We have financing lined up for those. We have verbals, but we think we'll get commitment for the greenhouses. We have LED partners. We have everything ready to go, and we're picking between 2 greenhouse sites depending on how we get it up. Also, by getting the LEDs in, we get some substantial credits from PG&E in California and the equivalent in Oregon. So we plan on getting greenhouses up for 3 to 4 cycles a year using LEDs. Right now, we haven't announced anything, but we're aggressively going after it. Indoor, we have UVI. We have 6 tax lots, of which 5 we can use. 1 we can't use because it's a leach field, septic field. And on each of those, we can put up 500 light grows. So 6 by 500 is up to 3,000 lights. Right now, we hired Ryan Burke and Associates, who just put up Cookies last grow. He's put up a big grow in Reading. He won a beauty contest, and we're designing the first 500 lights in partnership with our friends at Turpogs and Skittles. And we hope to have something operational by Q2 of next year on an indoor site. But we got another 5 acres to go into, so we're set there. Once we get that cultivation going, it's really going to drive California. And so, I mean, that's where we're at with it, and that's our overall strategy to articulate to everyone on this call.
Okay, great.
Maybe?
Great. Bear with me just for the next question. 1 second. Just bear with me here for a second. Really quickly, does the operator mind reminding the participants how they can submit? They can queue up to submit questions if there's availability at the end.
Certainly. In order to ask a question over the phone, you will need to press *1 on your telephone keypad. Again, that's *1 on your telephone keypad.
Okay, great. Yeah, we just have a couple more before we'll be able to turn to that. Just as a quick follow-up, Kieran, on the California project, is the Bar X farm for outdoor, that one with Connected, the investors in Connected, is it ready to grow, or will there be licenses required?
Okay, so Green Matter already has, really strong relationships in Lake County because they've licensed 20 acres, okay, to date. And so just to be very clear and explicit to everyone, the licensing they have is known as early activation. So we have 1,600 acres, which means that we have under local ordinance in Lake County, 80 acres of canopy we can put in, 60 acres of outdoor, and 20 acres of greenhouse. We cannot put in the 20 acres of greenhouse until we have our CEQA study done, and the earliest we'll be able to drop in 20 acres, I think, will be 2022. Hence, we're looking for an alternative greenhouse site. Under early activation, we can put up to 60 acres of outdoor. Jed and Joe and his team are highly confident that they'll get those licenses in time for our March autoflower grow. And so they're targeting getting the licenses by January. The applications for the early activation have gone in, are going in the next, I'd say, 2 weeks. And we already have sort of like an all's clear from what they're telling me is from Lake County in terms of that they see no reason why the application would not go through. So I would say that we're confident to highly confident that there are going to be no licensing issues. And, effectively we bought the property based on extensive due diligence, where we brought in our own consultants, and the mortgage holders brought in their own consultants who validated the same.
There are a couple questions about the UK as well. And first, they're wondering about whether we need licenses or are all in please to start importing from Buffalo, and if it's possible to ship directly from Lesotho to the United Kingdom. That was the first question.
Okay. All right. So that first question is no. Right now, it is not possible to ship directly. but it is possible to ship to Malta and then transform the products into what's known as cannabis, and cannabis medicinal products, or I forgot what's called CM. There's too many terms.
CBPM.
Yeah, CBPM, right? And so that is the strategy, and that is where we've gotten legal advice. And so that's why Malta is a key pivot for us, and that's why we're dispatching Andreas to Buffalo and to Malta and to the UK in the next 30 days. The other thing I want to emphasize is that CanMart does have all the licenses. To repeat, CanMart does have all the licenses, and it's one of only a handful of companies with the controlled drug licenses to import and distribute cannabis-based products for medicinal use, CBPMs, into the United Kingdom.
Yep, and then the follow-up question to that is just, overall on the cannabis demand in the UK, how is it developing? Essentially, what's the market size?
Okay, so the UK has as many cannabis users per capita, on a per capita basis, on a percentage basis, as many people in the UK smoke cannabis as in California. Okay, that's the first thing to know. The UK consumer is an active consumer of cannabis, and it is just primed in our minds, like California was when the medical movement opened in San Francisco due to the AIDS epidemic among the homosexual population. And then it just spun in California. So in our belief, it is at a tipping point. When you look at Prohibition Partners reporting, they're saying by 2024, the market will be about 4.2 billion. One of the critical aspects of this is to get NHS, or the National Healthcare System in the UK, to reimburse people for medical cannabis. Those studies are underway. But even without that, in March 2020, right, and we have COVID lockdowns, very hard, as everyone knows in the UK and Europe, it's not like the US. In 2020, more prescriptions were issued for cannabis in the entire year of 2019. That's the only data point I have. And I know the rate of prescriptions are increasing, despite the fact that mobility is frozen in the UK due to COVID.
All right. The remaining questions that were submitted are more about the financials overall. So one question is about Q4 and whether there'll be a similar range of revenues and gross profit as Q3.
Right now, my official line is the trend line will continue, but I really hope that we're going to beat it. So where our revenues are experiencing 2-digit growth, quarter over quarter, internally we're targeting a lot higher, okay? But I'm comfortable saying at this point that the trend line will continue.
And then the follow-up question to that is regarding the revenue, and essentially with all the press that's come out, what is the overall sense for 2021? This question thought it could be up to 200 million for 2021, but is management willing to give a range based on press releases, or just the trend is continuing?
Okay. So I think there's going to be, I'm hoping that some independent research will start being published in December and January, but I can put this in perspective. If you do the math on BarX alone is over 200 million. Okay? So assuming we have nothing else, that's over 200 million at a 60% profit at $750 a pound for green matter strains that today, in the middle of Croptober, when everything's flooded, they're selling to Ease, Old Pal, Loud Pack at much higher rates than $750, north of $1,200.
Right.
So that puts it in perspective for people.
I don't know that we have a lot more time right now, but if there are any, has anyone queued up to ask questions? Can our operator confirm that?
I do have one question if you're ready.
Sure.
All right, your first question over the phone comes from Michael Horowitz. Your line is open.
Yes, hello. I was wondering the amount of money that was spent for Canfields, how is that going to play into any revenue? So what's the purpose of that software?
Okay. So, Katie, you want to answer it with our software assets? Because we have quite a few. We have 3 software assets and what our thought process is with each one of them.
Sure, absolutely.
Or you want me to do it? I'll do it. So effectively, Canfields is part of a suite of software. So we have Canapause, which is a customer flow piece of software for dispensaries. We have Canalift, which is the one for obtaining cannabis products, right? Which is part of the delivery software package we're putting together. And then we have Canfields. Where we think, if you want to look at Canapause and Canalift, as you know, we have our license in NoHo, so we plan to implement those there. Delivery is going to be a big component of what we're doing in NoHo, and we're also negotiating on other licenses. With Canfields, we think that it has big legs in the UK. So this software, as we're currently developing it, will be in the UK really, really critical, because the UK does not have the same level of, let's call it, lead maps, leafly, and strain-specific information. So I see Canfields more in Europe, in particularly the UK, and as we roll out to other markets. And this stuff, these products, by the way, we're looking at starting to debut them and beta them by Q2 of 2021.
Okay, thank you.
Okay.
We do have another question, and the question comes from Joe Cole. Your line is open.
Hi, how you doing, Karen? A couple of questions.
Good.
One, can you give a NoHo update? And also, with all the thing in California, what's going on with the remediation program? Is there a possibility to use that? I haven't spoken about much recently, so I'm just kind of curious about those 2 things.
Right. So, okay. So, what was the first question again? The second one, I can tell you.
The first question was just a quick NoHo update, if you have one. I mean, when do you think all of
Okay.
Yeah.
Okay. So, we have our location on Lancashire and Hesby, and we have not really been in love with that location. We have 2 other locations, one on Burbank and just east of Vineland, and we have another one on Vineland. And we're going to finalize or pull the trigger on one of those, I'd say, this month. And then it's just a question of hitting hammer to nail. So we'll start seeing revenues, we think, from that dispensary by, let's say, conservatively Q1 April, Q1 March. Neither of them need so much of a retrofit. I was literally just there on Friday. And I've walked that NoHo sector, I don't know how many times. And, finally it's sort of like, let's just get it done. So we're going to get it done, and that'll contribute, we think that'll contribute somewhere between conservatively 10 million on an annualized basis next year. I think that's where Scott's model's at. Regarding remediation and Coastal Harvest, right now, the issue is with Coastal Harvest is that we're sucking up a ton of capacity in Coastal Harvest for our own salespeople. One of the objections our salespeople have had in California and said that we're not growing at an exponential pace in California like we should be, is they need more products in their bags. So we've been shipping down fresh frozen, and we've been shipping down distillate grade material in order to just fill our salespeople's bags, which give us more incremental margin. We just hired the SVP of manufacturing for Moxie, Joshua Haddix, in the same role that he's doing for us here at Halo. And him being based in Southern California, he's gearing up to put more shifts in place. Once we put more shifts in place, we'll probably be able to do more remediation as well as just process more distillate. But right now, where we're lacking is in back-end capacity and manufacturing, and we're looking to add some more capacity up north right now as well. Because UVI, realistically, given COVID and everything, it's going to be another, I would say, 6 months before we add capacity. That being said, we're already doing cannabis processing at UVI, and we're bringing in third-party cannabis. We have our, large twisters up. We have our trimming operation up, and that's going pretty quick, which is giving us the back-end product we need in California to grow. Now we just got to get some more manufacturing capacity up, and that probably means at Coastal more shifts, more people, so we can turn more product.
Great.
Your next question comes from a line of Jack Sleep. Your line is open.
Hey, Kieran and team, congratulations on the positive quarter. I wanted to go back and ask a question about the partnership with Terpogs and Skittles. That's a really, really popular brand in the retail flower consumption space. Can you talk a little bit about how that brand brings value to the Halo brand and an overall partnership?
Yeah, sure. Yeah. So when we started talking with Fields, Tony, and John Doe, they wanted us to buy them for $12 million, right? Or $13 million. And we couldn't really figure out a way to make that happen because they didn't have they didn't really have the numbers or technology or a strain bank to justify that. So instead, what we've done is we've done a series of partnerships with them. So we have that partnership in Lesotho, that contract's out for signature, but we're operating like it's going. We're doing the indoor grow with them. And now they're bringing us a ton of product, not a ton. Let's say they brought us a couple 100 pounds. I don't mean figuratively a ton. But they brought a couple 100 pounds into UVI. And we're about to launch, actually not launch. They have a really successful pre-roll line that they're continually selling out of. It's a whole nug Terpogs pre-roll line. That's moving over to us, and we're ordering all the packaging for it this week. And that effectively sells outdoor whole nug at 1,800 A's and B's. The second thing we're doing with them is we're looking at putting a terp sauce line of products together with them. We're having a little bit of an internal debate whether to use a 510 thread cartridge versus a pod system. But we have the samples there, and we just got to pull the trigger on the pods. And then we're going to be making sauce for them again, which puts more pressure on Coastal Harvest. And then they grade out the sauce, and then we launch their first 510 thread cartridges, which are pure sauce. So, we're just doing it project by project with them, and it's working well because they find us to be, they find us to be a great partner, and we find them to be a great partner. And you're right. They have great domain authority. It's a great brand, just like Shabrinsky's with their gelatos, Skittles with their terps. It's just in the Skittles line is extremely popular. And personally, from smoking it, there's a big difference when you smoke their stuff versus other stuff. I mean, it just has a terp profile that's very unique. So yeah, we're working with them intensely. I mean, I speak to John Doe or Tony probably once every other day. And also it dovetails into Feel Better because those products are coming out too. And those are looking really, really good as well. And again, part of that is to get some lineage behind them. And so Fields and Tony and those guys will give Feel Better what I call some, besides G-Eazy's name and the work they're doing, it'll give them some street cred when we go out with their products as well.
Your next question comes from the line of Lee Hacker. Your line is open.
Hi, Kieran. Congratulations on the Q3 and the great results. Just a quick question. Can you shed some light with regard to the impairment charges on the Canafields and the nasal-denoid acquisitions?
Philip can talk to you about it, but yeah, they're undernoted items on software, which are pretty typical, and on R&D. But Philip can answer that question.
Sure. Basically, when you buy an IP asset, software asset, under IFRS, you should use what they call the depreciating replacement value approach. And that's really like, what did it cost to build it out so far? Now, that doesn't really say anything. What is it going to worth going forward when we develop it? But what basically what IFRS says is that you then have to, versus what you paid for it, you have to take an impairment charge. And that's been the case for several of those IP assets that we acquire. Once they pass the phase of just an IP asset, they become developing assets, and they become cash-generating assets, then you can actually start building out your DCF model, and then the impairment charge may well reverse. But this is just an accounting thing that we have to do, and it's not cash.
Alrighty. Well, look, thank you guys so much. Thank you, ladies and gentlemen, for joining us today. Thank you, Philip, our wonderful CFO, and Kieran Kadu, our CEO. And thanks to our conference operator as well. And we look forward to hearing from all of you on another call in the next earnings call. Reach out anytime.
This concludes today's conference call. Thank you for participating.